Hi, this is Vijay Jagdish. In this video, I'm going to discuss about certain terms which is exam specific but related to the budget, because budget is being presented by the finance minister. So let us understand what is the terms we are expecting in the exam. So first and foremost will be the budget itself. What is this budget? Actually, in the constitution, according to article 112, there is no term called budget. So in the entire constitution, the word budget is missing. So instead of budget, what they are using is annual financial statement. Annual financial statement as per the article 112. Now the question can come, who shall cause to be laid before the parliament the annual financial statement? I repeat, who shall cause to lay before the parliament the annual financial statement? The answer is not finance minister, it is the president of India. Okay. So according to the article 112, it is a duty of the president to make sure that every financial year the annual financial statement, which is actually budget. So budget is also known by the name annual financial statement. The budget is presented to the parliament, whose duty is that to make sure it is the duty of the president according to the article 112. Okay. That is what the budget. Okay. Now this budget, financial year, lot of you people have heard about this, that April 1 to March 31st is the financial year of India. Okay. So if you look at the budget, it can be divided broadly into two categories. One is known as revenue budget, the other known as capital budget. So what is revenue budget? The word revenue here means two things. One is it does not create any liability. It does not create any liability, nor it is creating any asset. So under the revenue budget, you will have revenue receipts. Receipts means income. Then you have revenue expenditure. Revenue receipts means those incomes which the government is receiving, but it is not creating any liability. That means the government need not give this to anybody again, or it is not a borrowing as such. Okay, it is government's own money. Example, tax is there, any fine the government is collecting, or even the profit from the PSUs. Okay, all these are coming under the revenue income, revenue receipts. Revenue expenditure means those expenditure which do not create any kind of asset. It is just spent. For example, day-to-day government administrative function, they are giving government salary, pensions, and even the interest payment which the government has taken the loan, and for that they are paying interest. That is also revenue expenditure. Okay, so revenue expenditure neither creates any liability nor creates any asset. Now coming to the capital budget. Capital budget again consists of receipts and expenditure. Receipts means income. Whatever borrowing the government has done, whatever the loans the government has taken, which has to be paid back, that is a liability. Those whatever loans the government has taken, that has to be paid back, that is a liability. Okay, those incomes, those receipts are coming under the capital receipts or capital income. Capital expenditure means those expenditure which is creating an asset. It can be a railway track, it can be a infrastructure development, it can be even any kind of building the government is buying, or a gold government is, any kind of asset which is created by the government expenditure. All this is known as capital expenditure. Simply they will call it capex, capital expenditure. Okay, so budget as a whole consists of revenue budget and capital budget. The definition I have given you. Now, a lot of time you could have come across the concept called deficit. Fiscal deficit is there, primary deficit, all this deficit. Fiscal deficit means, okay, see, any developing country, either India or go to any other country, developing country, what they do is in deficit budgeting. Deficit budgeting means the government will spend more, the expenditure will be more than the income. The expenditure will be more than the income. So in this case, what the government will do, government will borrow the money and they will spend. Okay, so the borrowing amount, that is the gap between the income and the receipts, that is actually fiscal deficit. Okay, fiscal deficit is the gap between the income and the expenditure. It is a deliberate attempt. It is not actually happening. It was actually a deliberate attempt by the government to spend more so that the growth can happen, employment generation can happen. Okay, fiscal deficit. But at the same time, it cannot go beyond certain limit. Okay, it is a burden on the future generation, right? So that is why we have enacted a law called FRBM law in 2003, the Fiscal Responsibility Budgetary Management Act, FRBM. Under that, we are trying to reduce the fiscal deficit and completely eliminate the revenue deficit. Now, revenue deficit, what is revenue deficit? Whatever the revenue expenditure is done, it has to be done from the revenue receipts, right? but we are not having that much money, so we are borrowing for revenue expenditure as. Okay, so according to FRBM, we have to completely eliminate the revenue deficit. That is what the FRBM Act. And sometimes you might have heard about something called primary deficit. Primary deficit is very simple. It is like fiscal deficit includes interest payment also, no? Okay, so what they will do, fiscal deficit, they will remove all the interest payment. So fiscal deficit minus interest payment is what is known as primary deficit. Okay, then when the budget is passed, when the discussion happens, budget is introduced, and of course budget is a money bill. It can be introduced only in the Lok Sabha. Okay, Rajya Sabha doesn't have any power. If at all Rajya Sabha want to stop it, it can stop only for 14 days, beyond which it cannot stop. It goes to the president for automatic approval. Okay, so these are the certain terms which can be in the question regarding the budget. Any other doubt, you can always call me or you can send me a message. See you in another video. Thank you very much. Bye bye.